Most people think wealth is the result of luck, timing, or finding the next hot stock. That is not how fortunes are built over decades. The principle that transformed me into a billionaire is deceptively simple: radical transparency and principled decision-making. It is not a tactic or a trick. It is a framework for understanding reality, predicting cycles, and acting with clarity. When I began my journey, I realized early on that financial markets are not random. They are driven by patterns, incentives, human behavior, and the inevitable rise and fall of economies and currencies. These patterns repeat themselves with remarkable consistency. Understanding them requires a mindset that focuses on system-level thinking rather than isolated outcomes. The first step is acknowledging your own blind spots. Without radical honesty about your strengths and weaknesses, your decisions are built on illusions. This principle extends beyond self-awareness. It applies to organizations, investments, and capital allocation. In any system, whether a hedge fund, a global market, or a personal portfolio, the rules of cause and effect are predictable. Emotions, bias, and ego create noise, but the underlying mechanics remain consistent. By making decisions grounded in evidence, not in hope, you align yourself with reality rather than fight it. The economic doctor perspective is central here. Just as a physician diagnoses a patient based on symptoms and data rather than wishes, an investor must diagnose markets and cycles objectively. Radical transparency allows the system to work for you. It reveals inefficiencies, identifies risks, and uncovers opportunities before they become obvious. In other words, wealth is created not by chasing trends, but by observing patterns, analyzing them rigorously, and responding according to principles. Time horizon is another key component. Most people think in months or a few years. The elite think in decades and cycles. By consistently applying a principled framework, I was able to anticipate debt cycles, currency fluctuations, and shifts in global economic power. This principle did not produce instant results. It created a structural advantage that compounds over decades. Ultimately, the foundation of wealth is not about beating the market this week or this month. It is about understanding the machine that drives markets, acting with disciplined transparency, and allowing consistent principles to compound into extraordinary outcomes. Understanding principles is one thing. Applying them consistently over decades is what separates the few from the many. In my experience, the principle of radical transparency is inseparable from rigorous analysis of economic cycles, risk, and opportunity. Most investors react to short-term noise, market swings, headlines, or popular sentiment. That is not how wealth compounds. Wealth is created by seeing the system as it is, anticipating its movements, and acting deliberately before others recognize the pattern. The first step in applying this principle was mastering the mechanics of the economy and markets. I studied 500 years of debt cycles, currency transitions, and global power shifts. Patterns emerge. Recessions followed periods of excessive debt. Currency devaluations followed overextended fiscal policy. Empires rise and fall in remarkably predictable ways. By anchoring decisions in these patterns, I was able to anticipate shifts that others ignored, and more importantly, align my capital with the inevitable outcomes rather than short-term optimism. The second step was building a decision-making framework that reduced human bias. Emotions, ego, and conventional wisdom cloud judgment. To counteract this, I codified principles that govern both investing and organizational behavior. For example, diversify across uncorrelated assets, focus on long-term real returns rather than short-term nominal gains, and maintain a clear-eyed assessment of risk versus reward. Each investment decision became a test of principle rather than intuition or speculation. This systematic approach allowed me to manage complex portfolios with clarity and precision. Critical application was the development of the all-weather strategy, which exemplifies this principle in action. Instead of chasing high returns in a single asset class, I diversified across assets that respond differently to economic conditions. Bonds, equities, commodities, and currencies were combined in ways that reduced risk while maintaining expected returns. This approach was not about prediction. It was about structural alignment with economic reality. The principle ensured that the portfolio survived crises, captured upside when markets moved, and avoided catastrophic losses that destroyed wealth for less disciplined investors. Ultimately, applying principles is about discipline over speculation. By adhering to rules derived from history, data, and system-level understanding, I avoided the emotional traps that consume most investors. This is the reason the principle was not just helpful, it was transformative. It converted understanding into action, analysis into execution, and consistency into compounding wealth over decades. The principle that created extraordinary wealth is not limited to markets or portfolios. Its power extends to life, organizations, and decision-making at every level. Radical transparency and principled thinking provide a framework for evaluating opportunities, managing risk, and making consistent progress even in uncertain environments. The difference between those who succeed and those who struggle is not luck. It is alignment with timeless rules that govern reality. In organizations, for example, applying principles means creating a culture where truth is prioritized over ego. Decisions are based on data, evidence, and reasoned debate rather than hierarchy or popularity. I built Bridgewater on this foundation. Every idea challenged, every assumption tested, and every decision documented. This system-level discipline enabled the firm to navigate market crises, understand economic shifts ahead of others, and consistently generate returns across decades. It is not charisma or hype that drives success. It is structured thinking applied rigorously. On a personal level, the principle manifests as time horizon discipline and system awareness. Most people plan for months or a few years. The elite plan for decades and cycles. By observing the long-term rhythms of economies, debt cycles, and capital flows, you position yourself to survive and thrive when the inevitable disruptions occur. Acting on principle allows you to avoid the emotional traps of fear and greed, which destroy wealth faster than any market crash. Wealth is preserved not by reacting to volatility, but by aligning with structural realities that exist regardless of sentiment. Moreover, the principle creates compounding advantages. Every decision aligned with reality reinforces the system, while each deviation introduces inefficiency or risk. Over time, disciplined action multiplies, producing both financial gains and clarity of thought. This is the hidden force behind the compounding of knowledge, insight, and capital, the same force that turned understanding into a billion-dollar outcome. Finally, the lesson for viewers is clear. Wealth is not an accident. It is the product of disciplined, principle-based thinking, applied consistently over time. Understanding systems, evaluating patterns, and acting with radical transparency transforms uncertainty into opportunity. The principle that turned me into a billionaire is simple, yet profound. Observe reality without bias. Make decisions based on principles, and execute consistently over decades. If you adopt this mindset, your outcomes will reflect structural advantage rather than chance. Wealth, insight, and resilience are not fleeting. They are the result of following rules that never change, regardless of market sentiment or headlines. The math doesn't lie, the system doesn't negotiate, and the principle endures.